Today's update looks at what's going on in the markets. Equities have corrected obviously last week with Biden announcing the capital gains tax, or the rich tax, I would say. Cryptos correct yet again. We'll go into that in a little bit of detail. We'll also look at some of the stocks that I've bought during the week and how I want to approach the next wave of cryptocurrency. When we look at the portfolio at the moment, we're at about 4.8% up for the month. We were as high as about 15%. So we've taken a little bit of heat with the cooling off of the markets, particularly around cryptocurrency. The good thing is we're 78% up year to date. We're still 6 months consecutively in double-digit growth. Not long left of April, so hopefully we can get close to that. But my main goal is to ensure that we finish in profit. Still blocked from copying until mid-May. Also a new video of my other series that I'm doing where I'm looking at practical tips to help new people on eToro. I focus on building your copier base. Just using some of the tips that I have implemented in my own activity to get to where I am at the moment. Still very, very early in my own journey, but these are some of the tips that have helped me. My activity overall this week was quite quiet, mainly because of the uncertainty in the market. Biden announced on Thursday that the capital gains hiked to 43.3% of their capital gains for people who earn over $1 million a year, be it a tax on the wealth. This had an impact on the stock markets on Thursday. However, the week ended strongly with a small rally. There was a decrease in the US Treasury yields as a result, as people looked for less riskier assets. Bitcoin made a correction this week. It marked about a 26% correction, which is very, very typical in bull markets or bull runs of the halving cycles. We saw the hash rate significantly drop, which is the processing power of how Bitcoin is mined. This hadn't been seen in a long time either. So this triggered a huge sell-off. Add in a few more bits and pieces like the BTC dominance fell below 50%, which hadn't been seen in 3 years. This coincided also with the Ethereum all-time high of 2,600. When this event happens, generally the flip to Ethereum sends Ethereum on its own journey to new heights, but also triggers some of the altcoins to also pump. Another technical that I would look at from Bitcoin's perspective was breaching the 0.618 retracement support of Fibonacci, where the support was at 51,368. This also determined the bearish scenario. The stochastic oscillator made a bearish cross while the RSI dropped below 50. Then bringing in the Biden news was just an extra factor on top of already ominous support of the technicals. This is all healthy for the sustainability of Bitcoin in particular. I think it'll go sideways for a few weeks. Usually the corrections are quite predictable, to be honest. Once they start, you're kind of expecting 25 to 30%. And in many cases, it could be more, it could be less. But we just don't want to be overexposed as a portfolio. April, technically, in the past, has been a strong month. We haven't seen that just yet. However, we still have a few days left of April, so let's see what happens. But whatever the case, we are prepared to take profits and cut losses. The Nasdaq climbed to a record Monday, just yesterday, as investors got back into the market after the dip on the weekend. Also, corporate earnings this week. The S&P ticked up to 0.2%, setting a record. The Dow Jones slipped 0.2%. With this uncertainty, my approach is generally just to let the market see what it can figure out itself, let it do its own thing, and then take action if the opportunities arise. And if they don't, there's no problems there. We'll just hang it out. The main positions from last week were Disney is one of my biggest positions open. In just 16 months, Disney Plus is halfway toward the amount of users that Netflix have, and they still haven't rolled out to all their geographies. I believe there's huge growth still to come as the parks and resorts reopen after COVID. Another company that I added was Lemonade. Lemonade is another long term hold of mine. I opened my first position last summer for Lemonade. I believe that the vision that the company has to disrupt insurance or the insurtech space is quite refreshing. They've recently just entered the auto insurance market, which is $300 billion market, diversifying its offering. Like a lot of companies in tech, profits are realized later on. So we look at valuing this slightly different. We'd value a normal value stock. Things like user growth, average premiums, market share. These are important factors to consider. So really, we're buying into potential. And in my opinion, a small amount of allocation of my portfolio here is important, as I feel strongly about this particular company. I've also added some to my holdings of BLOK, which BLOK is an ETF, and it exposes 80% of its net assets to blockchain companies. This is one low risk way to gain exposure to cryptocurrency without actually buying the cryptocurrency. It's had an 81% return over the last 12 months, which coincides, similarly enough to how the cryptocurrency market has performed. But for those who are looking to gain some exposure to cryptocurrency and blockchain, this is a great asset to consider. That's it from me this week. Please subscribe to the channel if you like the content. Please like the video. I hope that I get the next update out by the end of the week. But until then, take it easy and safe trading. Bye bye.